Welcome to the Lobster Talks podcast by Lobster Capital, where we celebrate the bold thinkers and innovators driving change in the startup world. I'm your host, Gabriel Jarrosson, and today I'm thrilled to have Tanvi Surti, the co-founder and CEO of Luca, a company that's revolutionizing the way retailers think about pricing. Tanvi, thank you for being on the show.
Thank you for having me, Gabriel.
That's awesome that we're here, and there's a lot of things I want to get to. But first of all, maybe tell us what Luca does and who you are.
Awesome. I'll start with who I am. My name is Tanvi. I'm the co-founder and CEO of Luca. My personal background is in computer science, and I spent a really long time building tech at Microsoft, where I worked on AI applications before it was cool. And then I worked at Uber. And at Uber, I wore a bunch of different hats. But the most interesting job I had is I used to lead the UberPool team. And at Uber, if you remember pre-pandemic, Uber pools were incredibly popular, but also incredibly unprofitable for the company. And we had this P&L that was losing hundreds of millions of dollars in bottom line. And my team and I set out on this project to transform the P&L to get the unit economics working. And we found that the most powerful lever to get the unit economics working for this product was pricing. How do we use contextual data? How do we use historical information, forecasts, customer data, driver information to find the right price for this product at the right time, such that a rider might take the ride, but it's not so expensive that they essentially churn from the platform, but not that cheap that Uber has to lose a bunch of money on the ride. And the unit economics of UberPool were right-sized by the work we did on UberPool pricing. And that started what I would say is like my love affair with like pricing and pricing economics. I was just so fascinated by all the different ways in which pricing decisions are made around us, whether it's airlines, whether it's Ubers, whether it's Airbnbs, whether it's like going to the grocery store and buying milk and eggs. How are prices decided? And the more I dug into it, the more I realized that the biggest companies of the world and the smallest companies of the world have this huge bifurcation in how pricing decisions are made. At the best companies in the world, where there are data scientists and engineers and sophisticated like economics professors and PhDs, they have these awesome like pricing algorithms that help these companies find a ton of value on the margins through predictive science. The smallest companies in the world, I wouldn't say smallest, the more traditional or like old school companies that don't have access to this technology, they're just guessing. Like there is some person somewhere in a spreadsheet saying, oh, this thing should be $5.99 and this other thing should be $6.99 because that seems right. And they're leaving a ton of money on the table. So that's where I started to think about, could we apply the pricing principles we've built here at Uber and at other large companies and offer it as a platform to companies that don't have access to that tech? And that's what Luca is today. Luca, started by my co-founder, Yona, and I, is a pricing engine for retail, where we help grocers, DTC brands, apparel brands, furniture brands make pricing and promotional decisions that help them make more money from what they're doing.
That's absolutely awesome and fascinating. And I love, it's a theme I see a lot at Y Combinator, people coming from big tech and trying to, in big tech, they're doing something, like you said, that big tech has the means to do, pricing, optimization with software, with AI, we're going to talk about it, of course, and bringing it to the masses, to the smaller businesses. I see this a lot at YC. You're exactly part of that revolution, I should say, or part of that movement at least. And that's absolutely, absolutely awesome. I want to ask you, you said retail, I'm guessing it's mostly online. Do you do offline as well? I was shocked. So I'm from France, and in the stores in France, every price tag is digitalized. It's a small screen and the price you can just update it from a computer. But in the US, every time I'm in San Francisco, which is quite often, and people have confirmed to me that everywhere in the US, it's still an actual piece of paper. And so in that case, how can you help them? Are you just doing online for now? Are you waiting for them to digitize the physical stores?
That's a great question. Actually, when we started on this journey in Y Combinator over a year ago, we said we want to be an online focused business. We want to focus on Shopify, big commerce, Amazon merchants, and really serve that customer base. But the more we talked to people and the more we discovered and understood the space, we started to realize that the problem is as deep in the offline universe as it is in the online universe. And through like customer conversations, we got naturally pulled into the offline space. Now, the offline space does work a little bit differently than the online space. And online, you make a pricing decision and you have it live immediately. In the offline space, pricing decisions have to be made with some foresight. So it takes manual labor to get prices updated on tags, like you correctly said. So pricing decisions are made maybe 1 to 3 weeks in advance, where you have a price plan that's essentially pushed down to the operations team. And let's imagine a classic grocer. There's someone like downstream of my platform that's essentially taking that price plan and executing it in the offline stores. It's less dynamic than, let's say, being able to change prices once every couple of days or once every few hours in the online universe. But it's actually such a huge improvement over how these grocers or retailers are making pricing decisions today that there is a ton of upside, even in that like weekly, bi-weekly cadence that we're able to implement for these businesses.
Wow, that's crazy. Without you, how often do they actually change the price if it's a physical store?
So it can actually happen that most grocers, and I'm speaking specifically about grocery because we're finding that most of our customers are in the grocery space. So most grocers are already changing prices about weekly, but usually those decisions are made on a couple of different accounts. Either costs go up, so your supplier has like increased price of milk by 10%, and you're essentially just passing that 10% down to your customer. So there is the exercise that is the cost plus margin exercise. And the second is inventory based decisions. So, like a bunch of eggs are about to go bad and I need to sell them in the next 48 hours, or I'm going to have to throw them in the trash. So, I'm going to give like a 60% discount on all the eggs so that I'm getting them off my shelves faster. So, we find that grocers are actually already making these kinds of decisions on a weekly cadence already. What they're not doing is they're not applying machine learning and science to how should I think about my entire inventory and my entire SKU set and how I want to make price changes for the upcoming week based on other considerations like what is the weather going to be? How are my competitors pricing products? Or what is my customers' elasticities to specific price points? We're able to incorporate all of those signals so that our customers are not simply making cost plus margin equals price like decisions, which, as anyone who understands economics knows, is a very poor way to make any kind of pricing decision.
That's fascinating. I mean, I want to come back to the machine learning and to all the elements that you take into the algorithm. I mean, we should table that for a minute from now. But before, I want to ask you, it's so different building for a physical store, a grocery store, where maybe if it's sunny, you're going to discount the beers for the park. I don't know. And to build for an online retailer where it's it's so different. And so you've mentioned that you're taking in a lot of parameters. Again, you can take in so many more parameters online because you have a lot of information about the customer. In the store, you don't know much. I mean, it depends. So how are you thinking about this? It sounds to me like you're almost building two businesses in parallel, or are you now going all into the stores and leaving the online behind? It can be the same algorithm. Do you have two different tools for those two types of businesses?
So I'll answer the like business question and then I'll answer the tech question. As a founder, my job is to find kind of the largest group of paying customers who have a specific pricing or promotional problem. And the more I've explored the retail ecosystem, the more I've realized that DTC brands and online commerce, even today, form about 15 to 16% of all retail in the United States. So most people in the US are still making physical purchases in a mall, in a
Yeah.
grocery store, in a convenience store. So, the largest problem for my prospective clients is actually in the offline universe. So, I'm essentially kind of just following where I am hearing the problem. And in terms of the kind of customers who have need for my product, it's not the small businesses. It's not the sub $1 to $2 million in revenue. It's the larger businesses because that's where you're doing tens of thousands of SKUs, huge volumes of pricing, a lot of moving inventory, a lot of different locations, pricing zones. That complexity of pricing and promotion problems happens at a certain scale of like medium to large enterprise retailers. So that's the customer I'm going after. And as I said, that profile of customer is very likely to be online and offline or predominantly offline. They're likely to be multi-channel, like take a Old Navy type business as an example, like huge business online, lots of physical stores, so on and so forth. So that's my TAM. That's the kind of business answer. You asked a technology question, which is like, is the same model powering online and offline? Because the features used to train these models are different. And the answer to that question is no, they're not the same model. But at the same time, no two customers I work with is powered by the same model. We are taking a very white label approach with every customer we work with, where we train a custom model specific to their business. So if you came to me and said, I have a large retail organization and I sell bikes, we would train a model that's specific to your business with parameters that are relevant to your business. And those parameters might not look the same between different kinds of businesses. So while the underlying kind of SaaS platform and user interface and onboarding and workflow is identical, the heart of the pricing algorithm, which is a model, is custom for every customer we
Oh,
work
yeah.
with.
I mean, that's fascinating. I guess you have to, because if you have a generic model, it just doesn't work. And so I want to dive into the parameters and the machine learning part of it, which is really fascinating to me. What I'd like to start by asking you is I'm guessing, tell me if I'm wrong, I'm guessing you go with the client and you say, okay, what do you know about your business? Maybe we put in the model that people buy more bikes in the summer and they buy less bikes when it's raining, some sort of kind of general knowledge around the industry that people already know about. But then because it's ML, it's a model that learns itself, and potentially you can discover some new data that no one knew. Like maybe people love buying bikes on Tuesdays. So do you start just with the assumptions of the client? Then if your model says otherwise, do you just go with the model? Have you learned some very interesting things like people don't buy bikes on Tuesdays or ice cream on Sundays or something, some stuff like that?
Yeah. The beautiful thing about machine learning based models, when you pour into it a huge volume of data, is it'll find the patterns without a human having to put a thumb on the scale. So let's talk concretely what that means. Let's use the example of you run biking business, and over like 4 or 5 year period you have huge volumes of different models sold. You have a bunch of data around what your costs are. We have a bunch of data around how your competitors are selling their biking products. We are going to see some seasonal behaviors in your year. So you might see a lot more bikes being sold in the spring for people who want to bike in the summer, but not as many in the winter, let's say. We just funnel all of those data points into our machine learning model. And essentially, our model in itself is able to like pull out which features it should give more weight to just based on kind of the core structure of what we do. So, usually we don't have either us as the pricing experts or you as the operator say, hey, I actually think that like this specific parameter is incredibly important for pricing decisions. The model kind of learns on its own. The way humans put their thumb on the scale is we have this extremely configurable pricing strategy element where an operator can come in and say, okay, this is what the model says, but here are the constraints I'm going to put around it. And those constraints can be, I need to make at least 500,000 in profit a month. It can be, I want to make sure that my prices are not more than 10% more expensive than my closest competitor. It can be something like, I want all my prices to end in 0.99. Like, you will come in and set up a bunch of constraints and business rules, and then you're giving the model space to optimize within those rules. And the model has been trained on a glut of data about your business and kind of the larger industry you're training in. And that in itself is able to produce pretty powerful outcomes. The last piece I will say is the model learns over time. So once you've started to make pricing decisions, the model is getting retrained on what happens every time you make a price change. And it's able to use that to refine its understanding of your business over time, which gets more and more precise.
That's awesome. I love that. So interestingly, you're not giving it assumption. You just give it the data. But what's really cool about what you said, you give it parameters and you said, I want to make, $500,000 in profit per month. You can basically just put your whole business on autopilot and be like, hey, you do you, whatever.
Yeah.
As long as I make the profit, I'm happy, that's how it is, right? So that's absolutely cool. I love that.
Yeah. I think what we've learned is one of the forcing functions of adopting a pricing tool like us for retailers is they are now putting on paper what their like pricing objectives are, and which in itself can be very powerful because you know you're hitting them or you're not hitting them. So let's take the $500,000 of profit a month. You're saying that is my overall objective, but then you start to think, like, okay, but what is my competitor positioning or what is my margin profile? And we essentially have given all these configurations within our solution for customers to be able to do that. And as you said, once they've set them up, it's on autopilot unless I change a business objective or I launch a new product line, which means those hours you are spending on like going line by line, making pricing decisions across like tens of thousands of SKUs, all that time goes away. And now that is applied to thinking high level about pricing strategy, which is how you should be spending your time.
Yeah. Again, very, very effective tool. I absolutely love that. And yeah, it's fascinating to realize I'm listening to you and I'm like, there's so many jobs this can replace. Everyone just kind of guessing prices on a spreadsheet. You just plug Luca and that's it. It's actually going to be cheaper, faster, better than even a team of 10 or 100 people could do because it's, again, ML, data backed, and updating in real time. You're part of those tools that really use AI. We haven't said AI, we've said ML, but AI is just the fancy term. ML is the real thing of what it is. AI is the trend. You're building AI for enterprise back office, which is, I guess, where most of the gains are, but it's not where most people are focusing. There's so many people focusing on, B2C customer facing AI. Was that on purpose on your end from the beginning?
Yeah, I think that when people usually talk about AI, they're talking about AI in the LLM context, right? Like, how do we take unstructured data and convert that to either something structured or like a question answer based format? What I'm trying to do here with Luca is it's not unstructured data. We are applying economics and basic ML to quantitative information. So it's not AI in the sense like LLMs are AI. We very purposefully took an approach to solve a specific back office enterprise pain point. And we want to be the owners of that workflow end to end. From the time you have cost data or pricing, like a price point or a new product, all the way to when a pricing decision is made, how it's measured, and then how it's kind of fed back into the system. We want to own that entire scenario end to end. It just so happens that the best way to do that is with the kind of AI we are building. So we're not building AI for AI's sake. We're building AI to solve a very specific use case that is a pain point. Now, the cool thing about building a business in 2024 is you can layer on top of that a bunch of ease of use things with LLMs. I'll give you an example. One of the things we do is we help our customers get competitor data. So if you are selling milk, I want to find out like which of your 5 competitors are selling milk and then at what price point. We use LLMs to power that logic because we're able to use an API powered by another YC company actually called Skyvarn to go find milk on these other competitors' websites, extract their price, extract their product name, and then use that in our pricing decisions. So that's a classic LLM use case. Unstructured data, find my competitors, find their price points. That's an LLM use case. Another LLM use case is you as an operator might not want to say margin equals 55% for SKU 1, 2, 3, 4, 5. Like that's pretty tedious. We're investing in a chatbot that lets you say, hey, I'd like for the next month this category of SKUs to have at least like 55% margin. And that interface of being able to converse with our solution as opposed to configuring and like operating on very complex UIs and setting up rules, that ease of use, that very natural human conversation, like you might almost chat with a coworker on Slack, oh, very similar statement. That's what LLMs empower. So kind of my long answer to your like AI question is I want to own the pricing workflow. The baseline of what I do is economics. It's not LLMs, but LLMs like help make that economics more usable, more understandable, more powerful. And that's where we're going after like LLM based use cases. We don't want to build AI for AI's sake.
Absolutely. And that's why you're very precise to say ML earlier, because when you say AI, it means everything. ML is AI, LLMs are AI as well. AI means nothing. It's so much overused right now. So let's go with the right terms. LLM on one side, MLs on the others. It's really interesting. I'm listening to you, and you talked about talking to an LLM like a coworker, and you're talking, I believe, on your website that Luca is a pricing copilot. So you're not saying Luca's going to replace, and that's basically what I said a minute ago, that's going to replace a team. It's not going to replace a team. It's actually kind of a new super powerful coworker that you can talk with, talk to, exchange information, probably ask questions. Hey, what was my margin on milk last month? And hey, what if we tried this? So it really is kind of a new member of your team with superpowers.
Yeah, we very specifically took that brand positioning as a co-pilot because when it comes to enterprise decisions, they need to be precise. You can't mess up with pricing decisions or discounting decisions on like a high volume SKU by even a few cents. So we acknowledge that systems like ours are going to be imprecise, at least in the beginning. And that while the long tail of decisions might be automated, as an operator, you still might want a human to manually validate your top 100 SKUs. And that's okay. And that's important. And we want to build workflows that enable that. So I think there is a very specific decision for us on AI Copilot, like you correctly said, and or pricing Copilot, not quite like we're going to be your pricing team, is we want to take the person who's spending 40 hours a week in spreadsheets and make it 4 hours or maybe even 2 hours a week on the Luca platform, where that person is evaluating outcomes, not like making manual, tedious decisions by themselves. And that's a very specific reason why, especially for enterprise, and I don't think that's just true for us, I see a lot of startups that are going after specific enterprise use cases, whether it's in the legal context or accounting context, HR context, take a very specific like co-pilot positioning because of the importance of precision in these use cases.
Yeah, I mean, it's again what AI, and again, AI is such a bad term, but it's what AI is doing is taking a job that takes 40 hours and replacing it of 2 hours of conversation. And that's quite magical. I mean, it's the creative destruction of innovation. Okay, moving on. Well, I'm actually going back to something you said previously that I wanted to ask you about. Obviously, you went through YC, you're a tech startup, you've raised money, venture capital. So you have investors who expect you to grow exponentially, to become a unicorn, to make an exit, etc. And you just said that you're handcrafting and tailoring, one by one, the models for your customers. And YC is very famous for saying, do things that don't scale. I think it's Paul Graham. And, you got to go with things that don't scale. But of course, you do want to reach economies of scale and become a huge company. So I'm sure you've thought about this, and I'd like to, tell me how you're thinking of those terms and how do you make those two things work at the same time?
Yeah, I think maybe to answer that question, a little bit of history on like our thinking and evolution in this space. When we started this business, we thought, oh, we need to build like a one size fits all solution that is targeted towards literally anyone who wants to use it. So small business owners, medium business owners, enterprise if they want to. We want to build kind of Swiss Army knife of pricing that has all these tools, and you come in and you take this and you take that and like make it all work and configure things, like kind of almost like a developer tools mindset. If you are building a developer tool, that is how you would build it. You would build a Swiss Army knife and developers come and figure things out. The more we explored the space, the more we realized that you cannot build a Swiss Army knife for an extremely large and varied audience and expect them to come in and configure and like custom build a model and like pick different features and weights and essentially operate on a very complicated platform for a very end-to-end use case. Like that's just not the right way to think about a problem space like pricing, which is a very operator focused use case. Which is where we started to realize if we want to do this right, we need to solve it end to end. End to end means do all the data ingestions and data integrations ourselves, like integrate with different ERPs, have a robust interface with a ton of explainability baked in, a way to set up lots of like strategy, configurations, and rules. And then once a decision is made, pushing that decision into your production system. And the whole end to end workflow with notifications, like everything needs to live in one place. And then we realize, okay, that's not actually a Swiss Army knife. That's actually a very specific UX. And if we want to make this work, it needs to be for a business of a certain size where there is a certain willingness to pay. There is an old startup founder joke where all roads lead to enterprise, where everyone who even starts with small businesses eventually realizes they need to go after the larger businesses with a larger contract size. And I think we had that realization early. Like all roads, our road certainly led to enterprise, where we said actually small and medium businesses, we one don't want to build a Swiss Army knife. Two, we don't want to do some custom work for small businesses for small contract sizes. So we need a minimum threshold on contract size for this to make sense for us. And at that point, we started deciding that we have essentially internally a revenue cutoff, and we only target businesses above that revenue cutoff, which then comes back to the original question you asked, should we be building custom models for each customer we onboard? The answer to that is honestly, for the contract sizes we're going after, yes. Like Palantir today is building like custom models for every customer they onboard, and they are a 10 or higher $billion company. And they're still doing things that don't scale because it makes sense for the customer size they're going after. We're no Palantir, but like at the same time, like that's how we see growth is we do very custom models with this bespoke end-to-end workflow and UX that end-to-end solves the pricing problem.
That's super interesting what you said. All roads lead to enterprise. And yes, if you're going with small retail customers, you need something self-service that doesn't require your time. If you're going after big contract, you're going to have to personalize what you're building for your customers. It's interesting for someone listening to us, for a founder, if you're going after small clients, but you still have to do hand-holding and personalization for each of those, that's a recipe for disaster. You got to move up market, or you got to simplify your solution and make it self-service, but you can't have it either way. And that's what, like you said, you figured it out super early. If it's completely self-service Swiss Army knife, it doesn't work. So you basically had to sort of pivot or go after higher in the market. That's it's pretty clairvoyant of you to see this, to realize this, from the beginning. Luckily enough, you didn't waste time to realize it and go after the wrong customers. So congratulations. You've mentioned YC a bunch of times. You have a partnership with a Y Combinator startup that you mentioned as well. This podcast, as you know, is only for YC founders. My fund, Lobster Capital, is only investing in YC. So I'm a big believer in YC. Tell me, what did YC bring to you? What you just mentioned that you realized, was YC instrumental helping you realize this? If not, what did you get from going through YC?
I think what I got from Y Combinator is sales, go to market, and marketing is something I've never had to think about in my career prior to this startup. I used to work at larger companies as a product manager where I didn't think very hard about like how is someone selling the thing I'm building. At YC, I got a crash course in go to market, sales, and positioning that I couldn't have gotten anywhere else. And I think that I can say that for every YC founder I've kind of interacted with over the years, everyone came in with some pointiness. Like either you are an engineer and you haven't thought about sales, or you're a sales or BD person and you've never really deeply had to build robust product and technology. YC has this effect of rounding you out as a founder that makes you more complete and like more functional as a founder when you come out of it. And that's how YC has been like really instrumental in my journey. Is it gave me a perspective on how to think about sales and specifically enterprise sales that I still kind of carry with me. So YC has been really powerful from that perspective. The second perspective is like people talk about the YC community all the time, and I was a little bit skeptical until I saw it from the inside. The YC community is so incredibly powerful because, yes, you make friends, you see like how other people build their businesses, you learn from other people's mistakes. But YC companies also form like every service we use, every provider we've worked with, like whether it's our competitor data provider, our data integrations, our accounting systems, our tax systems, they're all YC companies. So it feels like we're getting the best tools and services out there from very trusted friends in a community of people who are open, transparent, and honest with each other, while like helping us kind of build out our skill sets where we have gaps. For me, that was go to market and sales. That's why YC has been powerful and continues to be powerful. Like it's been more than a year since we graduated. It continues to be powerful in that way.
That's incredible to hear. I wanted to add to what you said. You're getting the best service from friends with everything you need and with a discount because there's usually a YC discount.
Yes,
So that's even better.
that's absolutely.
But no,
Yeah.
that's really fascinating to hear you say this. Again, I mean, learning sales and go to market and effectively, because learning sales means a ton of different things, but learning sales from YC that actually works, that actually makes your startup grow, that's invaluable and probably one of the best things you can ever learn in your entire life, learning to sell. And I want to transition to fundraising because fundraising is also a sales pitch. So did YC help you with fundraising as well? I mean, I'm guessing there's all the kind of the attention around demo day, but did you find that helpful as well?
The Y Combinator experience of fundraising is it's a forcing function for it's essentially a marketplace dynamic. I'm from Uber. I spent a lot of time thinking about marketplaces, two-sided marketplaces, and YC creates a two-sided marketplace. There is supply, there is demand, and there is a time crunch. And then extremely quickly, matchmaking and decisions happen within that time crunch because you've created a system where investors looking for founders, founders looking for investors, they all talk, everyone has hundreds of conversations, and then a bunch of them pair up. And the reason I describe it as a marketplace is outside of the YC context, it doesn't follow the same dynamics.
For sure.
I could have spent 6 months maybe spending time talking to investors without any specific timelines, without any urgency, just casually having coffees over months and months and months until I was able to close my round. YC created a marketplace of investors and founders for me that enabled me to close a round over a 3-week period.
Wow.
Right before the date, like you said. And it was very clean. Like there were some investors that weren't buying what I was selling, and there were some investors where I was like, this is not a good vibe. And very quickly I found Mendo Ventures that they've led our round, and specific the partner we work with, Ankur Arya. It was just like a match immediately. And then the rest of our round was filled with other great angels and investors that we also like matched with pretty quickly. YC enabled that marketplace dynamic to help that happen with a specific timeline and urgency.
That's fascinating to think about it as a marketplace. I mean, I've been closely involved in all the demo days and the investing since around 2020. I mean, since the winter 2020 batch, to be precise. And it's exactly what it is. It's a marketplace. Something I've always thought about, kept in mind, and all of my portfolio companies, I warn them about this as well. When you're going to raise your Series A, it's not going to be the same. You're not going to have the same, attention. You're not going to have the same marketplace, the same time crunch. All those investors coming to you. You haven't yet raised your Series A, I believe. But how do you think about
No.
that? How can you try to recreate that environment? Aren't you scared that it's going to be much, much, much harder?
Honestly, I'm not thinking very much about my Series A at all because I would still consider Luca like on the hunt for product market fit. Like we have a problem identified, we have a customer base identified. We have to learn how to do this at scale and quickly. And I think if I start to see those product market fit signals, if it is right, fundraising will happen. And if it is not right, I have to go pursue product market fit harder. So, like, I try not to think about fundraising as a, like, I need to get to a Series A milestone as much as I like to think about getting to product market fit. And then on my way there, if I need more capital to get to that destination, then a Series A shall be pursued, otherwise not. Maybe sounds like a very trite answer, but I'm trying not to think about a Series A before I figure out that there is a real business here that can grow and that can be massive. Only then should I go out into the market and ask for other people to put their money here. And so I need to answer my like internal question before I go out and ask the external one.
Yeah, I see what you mean. It just hasn't been top of mind for you at the time.
Hmm.
Speaking of which, we're
Hasn't.
sort of close to the end here. So I want to ask you just, I guess, two more questions, one about Luca and one more personal. About Luca, what's the future
Hmm.
looking like? What are you excited about? What's maybe coming to market in the coming weeks or months? What's just the future looking like for Luca?
Yeah, there are two things I'm excited about. One is we are going to expand our team and have a couple of people come on board full time that I'm so pumped about. Like the best thing about building a business is you get to decide who you get to work with, and they can be awesome people. And I am so excited to like grow my team, and like we are an in-person team, which means like we do happy hours and lunches together and stuff, and like so pumped about that. The other thing I'm excited about at Luca is we are taking a very explicit step into promotions and discounts in addition to pricing. And we have so many ideas of the things we want to build for promotions and discounts in addition to pricing. So I'm excited to add another use case to our portfolio.
That's really cool. There's so many things to do. The other question, the last one, more personal, is there a book or a quote that you could share with us that had a big influence in your life? Either a book that you read and reread and gifted, I don't know, or a quote that you live by.
Yeah. The one book that I find myself going back to a lot is Viktor Frankl's Man's Search for Meaning. It is a book written by a man who spent years in a Nazi concentration camp. And it is perhaps the deepest reflection of the strength of the human spirit and the strength we all hold inside of us that I have ever read. And it is every time I feel sad, I feel defeated, I go back to that book. There are so many quotes from that book. I'm just going to have a really hard time remembering one off the top of my head right now. That is the book like I go back to. Like I must have read it over 10 times and I couldn't recommend it more to anyone who not just as a startup founder, but is just going through a hard time. And it can remind you the strength of your spirit. And it always makes me feel better.
Yeah, it's an absolutely amazing recommendation. So thank you for that. Tanvi, it's been an amazing conversation with you. Thank you so much. For listeners who want to learn more, where can they find you? Where can they find Luca online?
Yeah. So you can find me specifically on LinkedIn, which is the social media platform I'm most active on. And you can learn more about Luca at our website, www.askluca.com. Thank you, Gabriel, for inviting me. I really enjoyed this conversation. Thank you for making time.
Yeah, that was awesome. Thank you for making the time. Thank you so much. And to all listeners, thank you for joining us as well. Don't forget to subscribe for more conversations like this. And please don't forget to rate us and leave a review on your favorite podcast platform. Until next time on the Lobster Talks, stay bold, stay curious, and remember, those big ideas start somewhere.